I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone.
If you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Bitcoin has entered the gold rush era, and it's here for 10 years. That's the latest message from MicroStrategy founder, Saylor. This period will be marked by multi-trillion-dollar firms, such as Microsoft and Apple, investing in the leading digital asset to avoid currency debasement. The gold rush era began in January of 2024, with the launch of the first Bitcoin spot ETFs. Was approved by the SEC, prompting thousands of institutional investors access to invest in the largest cryptocurrency by market cap. Essentially, an entire new class of investor was able to join the crypto space. The gold rush era will last until 2035. The approval of the ETFs marked a step change in the regulatory landscape around crypto, and managed to dispel many of the misconceptions around Bitcoin. The advent of major Wall Street players into the crypto space, such as Fidelity and BlackRock, signals that Bitcoin is here for the long term, and is a massive vote of confidence for other potential ETF issuers around the world. Make sure to watch the rest of this video where Saylor dives into the current state of institutional investing in relation to Bitcoin.
Once you get Bitcoin and it clicks in your mind, your immediate reaction is, oh, I gotta hurry and buy as much as I can because someone else is gonna go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I gotta do this in a hurry because someone's gonna figure it out and the price is gonna 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head. Because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion, or $5 billion or $10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money, and if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year. And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin. Right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills. And a junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor a lot of times these companies had the same bank for 20 years, 30 years. You know, now, Citibank used to be National City Bank. National City Bank was the Rockefeller Bank. It was John D. Rockefeller's bank. Right? It's not unlikely that the oil companies have been doing business with the same bank for 100 years, right? So when we did it before those things. Right now, what we've seen is the ETFs have been important green check in this process. The accounting changes have been a second green check.
Thanks for watching. Please don't forget to subscribe to get the latest updates from the crypto market direct to your inbox.